So PayPal stock just announced Q4 earnings today, and before the earnings, the stock has gone down around 1.6%, but after earnings, it has gone up 5.5%. So is it finally a buy to get into PayPal stock? In the past year, like most tech stocks, it's been down 35%, but year to date, it has gone up around 5.15%. But this is still lagging a lot of the other tech stocks when you compare it to Facebook, Netflix, Tesla. All of those stocks in the past year to date has gone up a lot more than PayPal. So let's look at it from a fundamental analysis and see if this company is worth investing in. Now let's go over some recent news about PayPal. So they did announce in August that they are going to be doing a $15 billion buyback. And this is actually huge because the company only has a market cap of $90 billion. And with this $15 billion buyback, it's more than 1/6 the shares. So this should have some momentum on this stock to eventually increase the price. Also, they did get into some controversy where PayPal was telling users that it's going to fine them up to $2,500 for misinformation. They did backtrack from this, but this is something to watch out for in this company because they are trying to get into politics, which while we are the investor channel, we're trying to make money, and usually politics creates division, which could cause some users to leave the platform. So right now they have backtracked from it, but this is something to watch later on as well. Looking at PayPal from a consensus earnings perspective, we can see that this company is expected to really increase their earnings per share substantially. It's in the 20% and almost in the 15%. So it is looking like it's going to be growing substantially within the past 3 years, which is significant for the stock. But the revenue estimates for this company is a lot lower. It's only growing in the mid single digits. So 6% they're expecting on this quarter. Next quarter, 8%, and only in 2024, in September quarter, they expect 10%. So basically throughout the next 3 years, this company is not expected to grow that much. And this is significant because inflation right now is 8%. And if the company is only growing 6.8%, this is even lower than the rate of inflation. So this is probably something that is causing an impact on the stock and something to watch out for as well. Some other news about PayPal. PayPal was about to lay off 2,000 employees. So a lot of tech companies right now are laying off workers, and this was announced just a few days ago. And this did amount to around 7% of the workforce. So they are doing a lot of cost cutting, and this should help in their earnings per share increase. And as long as they do more of these, it should have some support for this company to do buybacks and do other cost cutting measures, which should help investors. Looking at the chart from a more of a valuation perspective for the price to sales, we can see that this company currently has a price to sales of around 3.58. And this is basically a historic low. In the past 8 years, it has never traded at this level. Even in the pandemic, in March, it was at a price to sales of around 6 at the lowest point during the pandemic. And of course, during 2021, a lot of tech stocks did go up a lot, but it might look like this company has overcorrected on the other way because the price to sales is a lot lower now. So that is something to watch out for. Also, in terms of PayPal, they do have a huge market share in terms of payment processing online. So we can see that they have a 41% market share on websites online. So they are losing some websites, but it's also increasing. And this should help PayPal in the long term to get more sales as people do more online shopping. Okay, so now actually getting into the earnings, we can see that the company had a non-GAAP earnings per share of 1.24. And this was just a minor beat of 4 cents. The revenue is basically also a minor beat, only $10 million. So basically the same as analysts had expected. The total payment volume, it has gone up substantially from past year, and the transactions has grown 13% year over year. So the people who are using PayPal are keeping it a sticky product and doing more transactions using PayPal. We can see that there was guidance on the Q1 revenue estimates where it's expected to grow 9% without the FX impact. So this is actually lower than the consensus estimate of $7 billion. And it is showing that this company is not growing as much as it used to be. The earnings per share is expected to be not as much as it expected to be. But I think a lot of this should also be priced into the stock because the stock has gone down substantially from almost $250 to now around $80. The earnings per share is expected to be between $1.10, and it's growing around 24%. versus the consensus. So it is a slight beat in the earnings per share that they're expecting. And the FY23 earnings per share is expected to grow 18%. So this is gained from the consensus. So the company, even though they're not growing as much on the top line in the revenue, it does look like their earnings per share is continuing to grow. And the free cash flow is expected to be around $5 billion. So they're doing massive share purchases. So it's around 75% of the free cash flow. And it seems like PayPal has returned around $4.2 billion in share repurchases in 2022. And this is 82% of the cash flow. So they're spending massive amounts on this share repurchase. So eventually, I think this stock should go up a little bit as they do more of these repurchases. Going over the 8K report that was announced today, we can see that the company's total payment volume has gone up around 5% year over year. And then it would have been 9% with FX neutral. So a lot of companies right now are having some issues because of the US dollar going up so much compared to other currencies. So this should be a tailwind for this company in the future. But this is something to note that it could have been 9% with FX neutral. We can see that the net revenues has gone up around 7% year over year. And the margins has also gone up as well from 15.2 to 16.8. We can see that the net income has gone up around 15% year over year. And the earnings per share has also gone up 19%. So with all these cost cutting, the company is significantly increasing their earnings per share as well. Now going over the balance sheet for PayPal, we can see that a lot of the assets does comes from the funds receivable and customer accounts, which is $36 billion. And this is almost met by the funds payable to customers, which is $40 billion. So a lot of the assets that this company does have is related to those transactions that customers do on their platform. Total current assets has gone up like around $3 billion. And liabilities has gone up around like $4 billion. So it's not too much to worry about here from just a balance sheet perspective. And then getting into the earnings statement, we can see that their earnings for net revenues was $7.3 billion this quarter. And this was higher than 6.9 the previous quarter. And it's basically flat here as well. So they did increase their net revenues by around $400 million. And the cost has gone up around a little bit less than that $400 million. So the expenses and the earnings, the revenue increase have kind of like canceled out each other. And something to note about this company is that they're doing a lot of cost cutting. So their sales and marketing has actually gone down from the previous year, 666 million to 524. And then their technology development is the only thing that has gone up slightly to around like $25 million. And general administrative has also gone down. So this company is doing a lot of prudent cost cutting measures. So this should help this company in increasing their earnings per share in the future. So we can see that after all these expenses, we're left with $1.2 billion as operating income. And then there's other expenses, which is usually their investments that they do in other companies. And then from a net earnings per share, we get a 0.81. So this has gone up from the previous year as well. Now looking at the stock from a technical perspective, we can see that it's basically trading at an area of support that has been in the stock since around 2017 December. So it has reached this level many times. So for people who are looking to buy the stock right now, I would say if you are thinking that this company is somehow going to increase their revenue substantially, it might be a time to buy. But honestly, from my own perspective, looking at this earnings statement, it doesn't look like this company is growing that much. They are increasing their earnings per share, but a big reason that people buy a lot of technology companies and PayPal in particular was because they were expecting some top line growth in the revenue estimates. And looking at this company, it doesn't look like it's growing that much anymore. And the stock market also does a lot of crazy things. So if there is a lot of momentum in the stock market in general, there could be a lot of room in the upside, because we have seen it in Netflix, we've seen it in Tesla, we've seen it in a lot of technology companies, and there's a lot of huge red candles here. So if there is some momentum into the stock, I wouldn't be surprised to see it at a higher level. But personally, I don't really see the growth here, and I usually invest in a lot more of the growth companies. So I wouldn't be a buyer, but if you are interested in this company, I wouldn't blame you for buying at this level. So that's it for my analysis on this company. If you like the video and subscribe for more videos in the future. Thank you.